Guys, we are in the middle of a really serious problem. We have a banking crisis. We have things going on with inflation, some bank insolvencies. And speaking of the banking problem, what the Fed did was what the FDIC did was extend the amount of money insured in some of the banks. Remember, what banks require is confidence and trust. So you have banks for various reasons like Credit Suisse, Deutsche Bank, and a few American banks with some serious problems. So let's start there. We also have the debt ceiling coming down the line, and there's no conversation going on about that. The housing market, I think, is really of a concern. The 30-year mortgage is 6.9. It's up 0.2 of a point. Existing home sales did go up last month, but something that the Federal Reserve uses to measure how well the housing market is going is called the Case-Shiller Index, and that's not showing good news. Moving on to energy, the Strategic Petroleum Reserve is about 40% of what it needs to be. That's the reserve we have in case we need to use oil in some type of disaster. The president has depleted it by 60% and promised that we will replenish it at between $68 and $72 per barrel. We're there. We've not begun to replenish the Strategic Petroleum Reserve, which is a problem, being that the price per barrel is down and within that range. So that's a concern. India, China continue to buy Russian oil. So with China reopening, it doesn't look like that by us restricting the trade of Russian oil is working that well. The embargo isn't working that well right now. A little bit about supply chains. In America here, we have a lack of truckers and drivers. It's been going on for a very long time. It makes things more complicated. Rising costs affect the supply chain along with consumer demand. Fuel prices are fluctuating. Labor costs are getting higher. And the technology is not up to speed. The crypto market, Bitcoin's doing very well. You can the problem with the rest of the crypto markets, other than things that are relegated to improve or grow as the market begins to drop, such as you consider a Bitcoin like a gold sort of. In the crypto market also, there's been a recent arrest of the owner of Terra USA. Do Kwon was his name. The IFM, the International Monetary Fund, is still pondering with cryptocurrency. So that's right now it's a little precarious to be in, but Bitcoin seems to be doing well. Inflation, I have tracked it for the last year, and we seem to still, it's not abating. It's certainly not anything that's transitory. The question that people may ask is, and have asked, is, are we in recession? When will we get in recession? The technical term for recession is 2 consecutive quarters of negative gross domestic product. And we experienced that last year. But they modified the definition of recession. gross product is really the number of goods and services provided and finished by a nation, sold abroad, less the imports, and that's a critical measure in telling whether an economy is growing. Unemployment is finally starting to rise. I know that sounds crazy, but that's what the Fed needs in order to fight inflation. In the stock markets, it's just a general flight to safety. People are going into technology stocks because of the banking situation. Typically, flights to safety in the stock market is banks. This time you're seeing Alphabet, you're seeing Microsoft, you're seeing Apple beginning to get influxes of cash into it. A couple of things to keep in mind. One of the chief indications of how the economy is going is something called the yield curve. And there's something called the yield curve inversion. And what that means, to make it in simple terms, is that people tend to have less confidence in lending their money out over a long period of time, let's say 30 years. They're scared. They rather lend it out for a shorter period of time, and in most cases you're going to get more money by lending it out longer than shorter. But the yield curve inversion is when you get more money from lending your money out for short period of times as opposed to long period of times, which really means that people are losing confidence in long-term investments. The effects of that, you can think about in the housing market. It runs rampant, but that is one of the most critical keys in telling how an economy is going. The interest rates are rising. We still have the war in the Ukraine. We still, as we talked about, addressing the spending bill and the debt ceiling. We have issues related to the student loan issue. We have issues related to the continuing funding of Ukraine. Basically, we the consumer price index, which is what is used to measure your wealth and power, has risen last month. The national debt continues to grow. We're at about $31 trillion. The saving rates for Americans are beginning to drop, which is really not a good thing. Also, credit card debt is rising in America dramatically to an all-time high, as well as family debt. So I can tell you right now, just going through the summary, it doesn't look good as of the date of this broadcast. We will keep you apprised of changes in the near future. And I thank you for joining me. If you like this, please give me a thumbs up and please subscribe. Have a good day.